All right, this is Kerry Artek with Artek Advisory. This is the AgriTalk video supplement Monday afternoon show for the week of Monday, October 19th. I'm covering corn, lean hogs, and cotton, giving you updates really on all three because I've talked about all three of them over the last month or so on the show, corn especially. Before I jump into this, let me just remind you that if you go to my website and you click on the AgriTalk section, you'll be able to, well, obviously you already done that because you're watching this video. But if you scroll all the way down to the bottom, I'd really love it if you filled out the free trial form, took it for a 2-week test drive. You'll get a call from me, consultation call. We can talk the market, see what your thoughts are, what my thoughts are. I do allow a new 2-week free trial if you've not had a free trial in 6 months. And if you're inside of 6 months, I give a 1-week free trial. Now, I won't give a 1-week free trial if you just had a free trial over the last few weeks. But, you know, if it was 3-4 months ago, certainly 2-3-4 months ago, certainly we'll give you the 1 week. And then beyond 6 months, 2 weeks. Let's jump into the market analysis. Let's start with corn. This is sort of a repeat if you've been following these videos or you've been listening to the show. In early September, the market rejected a long-term sell signal that actually played out mid-March when it settled below this 15-year channel bottom. This is a structure. Why I keep paying attention to this is a structure that held beautifully for several years. So it's still there. It is our floor of support now, really through the rest of the year and well into next. I'd mentioned on the show and I'm still mentioning in my newsletters that having settled above this 365.25 formation, next stop 407.25, which is a 50% retracement. That might be 5/8. I apologize if that number is off. I'm just looking at it right now. It looks more like 5/8. It probably is 5/8. Anyway, it is a Fibonacci retracement. The market did tag it last week for the first time on its way up from the April lows. 409 high, settled back, closed below the 407.25 area. If we close the week above 407.25, 465 half, here we come. The question is not, in my opinion, if, but when. Is it going to take a matter of weeks or a matter of months? I'm still thinking late winter, spring of 2021, where we could test 465 half. And yeah, let me just jump back to 407.25. This is the 50%, well, I keep calling it 50. I guess it is a 50% Fibonacci retracement against the 19 high and the 20 low. From here, 407.25, it is a respectable enough ceiling that the market could fall back over the next few weeks to 375.25, which is respectable in its own right in its ability to absorb selling on a monthly basis. And of course, it is really the start of a range, a 10-cent range of long-term support down to 365.25 that can absorb selling well into next year, and above which, you know, once we test this area, if we test the 365.25 to 75.25 area, market can run right back to 407.25 within a matter of weeks and then some. So once again, closing above 407.25, you know, we should reach this 465 half formation. You know, we've done this in about 5 to 8 weeks. There's no reason why we couldn't do this perhaps by the end of December if we were to settle this week above 407.25. But we could also get locked into consolidation time, you know, a period into November, December. You know, who knows? It could take 3 to 5 months, or it could take 3 to 5 weeks, but 465 half would be the next objective. And this formation is respectable, really, in its ability to absorb buying pressures in the broader corn futures market through spring and even into summer of 2021. Let's jump into the lean hogs. I only have one chart to show you. This is a repeat as well. You know, in early September, the first week of September, same as the corn market, lean hogs posted what I'm calling a midterm buy signal. Midterm being we've got a 2 to 3 month target in the mid 70s. We're a couple of months into this buy signal right now. And this is a moving target, 76, 77 for the week of Monday, October 19th. And it has been my objective all along, and is a formation that can absorb buying through winter and into spring of 2021. From here, the market can rotate south and fall back into what would then be sort of a convergence between an ascending channel bottom and this descending channel top that is presently at 58.30. I'm not even going to give you the lower number just yet because 58.30 is our base. It is this descending channel top we settled above the first week of September, then eliciting this 2 to 3 month buy signal at 76.77. Where once again we can top out on a seasonal basis, which is to say by that point in time, through winter, and from here we can fall back into the upper 50s, I'll say, within a matter of 3 to 5 months. However, closing any week above 76, 77, we've got phase 2 of an extended bull market, and I would then expect over the following 3 to 5 months, it would put us into spring of 2021, this 100 handle resistance, which is significant in its ability to absorb buying really through 2021 by that point in time. But right now, and also I might as well mention that we've got preliminary support at 66.95. That is this old high here from last May. It is an area that if you're trading this market aggressively, you can buy into this zone in anticipation of what I call kind of a 2 to 3, 3 to 5 week target now, 76.77. Closing below 66.95. Expect this 58.30 formation within about 3 to 5 weeks, where once again we can bottom out into next spring, and above which 76.77 remaining the overall objective. And finally, once again, closing above 76.77, phase 2, the 100 handle. Here we come within a matter of about 3 to 5 months. Finally, cotton. This is an update on the show. I put this out, I think, about a month ago. Once again, this is middle of September. This market elicited a longer-term buy signal by closing above a long-term descending channel top on the weekly chart. Sounds familiar. It's similar to lean hogs in a sense. There's not a whole lot going on here. I've got a lot going on with the 92 handle, and that is an area that I've been mentioning in my daily cotton letter is a possible target as we continue into summer of next year. Along the way, we've got a 50% retracement at 72.38 and a 5/8 retracement at 78.04. The 72.38 retracement, 50%, I like it a lot as a significant resistance area that can contain buying into December contract expiration because it's in rough alignment with an ascending channel top on the DECE only chart. This is the December weekly chart. In other words, it's December data only at 73.46 this week, October 19th. So this is an area that if tested this week, and I think that's a bit of a long shot right now. I still think we're a couple of weeks, 3 weeks away from testing this area. But this 73.46 formation, one, able to contain buying through November and into December expiration. From here, the market could fall back into the mid upper 60s again. But overall, I'll jump back to this chart. This is a significant development, this long-term buy signal. And I've got 72.38 to 73.46, which I showed you just a moment ago, as our next target. But then overall, 78.04 into late winter, early spring. And ultimately, it's 92.50. I know it's a bit of a rally, but we've got these longer-term rotations, these longer-term trending markets, and honestly, having closed above 63.64, it's kind of, you're pointing to the fences here on this 92 handle resistance, but I'm just putting it out there as an area the market may actually want, if you will, to reach over the next 8 to 12 months. I'll leave you with this chart because this kind of says it all, at least between now through the end of the year. Bullish above 63.64, anticipating 72.38 over the coming weeks, which is really the start of a range of resistance up to 73.46, I showed you in a moment ago, and 78.04 in reach as we continue into late winter, early spring. And that's all I need to say, really, for this particular cotton market. And that's all I really need to say for this week's AgriTalk video supplement. So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You've nothing to lose and much to gain.